Hey everyone, you're here because you want to know everything you possibly can about the Halifax real estate market, and this is the time. It's the start of October. We're looking back at September because we want to see exactly how the market's starting to perform in the Halifax market right here in Nova Scotia. So let's check it out. Good morning, good afternoon, good evening, wherever you are in the world watching this video that is all about the Halifax real estate stats, because I'm Richard Payne from Halifax Homes and Lifestyles at eXp Realty. This little piece of paper in front of me here, because I can't remember all the numbers, these are the stats that we're going to look for in September, because September is the first real month when we've looked at the numbers, we've looked at kind of how everybody felt during the month of September and went, yeah, this absolutely is showing a change for the Halifax market. 2021, 2022 has been crazy for not just Halifax, but the whole of Canada. Since probably May, it's felt like the Halifax market has slowed down. Bank of Canada has definitely done well on increasing the interest rates to slow that whole market down. And we're really seeing it now actually show up in the real stats that are showing in Halifax. So getting to what everybody wants. Everybody wants to know the average price. We're at $535,907. Now that one last month was $535,788. It's basically the same number from an average sale price point of view. Listing was 537. So when you look at that and go 537, 536, there isn't really any difference between asking price and sale price. It's kind of the same number, more or less. So yeah, we're at like 99.7% sale to list price. It's pretty close. So we'll just basically say if you were listed at 537, you were going to get 536. You know, it's more or less there. We'll get into the individual markets, but for the whole of the Halifax regional municipality, those are our numbers. Average days on market, 25 days on market. Last month that was 20, so we've gone up a little bit longer. Last year that was 18. Now let's look at last year, rewind a little bit. Let's look at last year's price. Last year's price was $522,000. So we're only up September last year to September this year, we're only up 3%. So that's giving you an idea as to like how the price has come down since its peak of around about April, May, but also compared to last year. So when you look at those numbers, and now let's look at the number of houses sold, because this is really interesting. 288 houses sold. Last month, 391, down 26%. Last year, 467 homes, down 38% on last year. So the amount of houses we've sold has really dropped off like quite a lot. Number of actives, so this is the other side of the coin, 660 houses active for sale, 656 last month for sale, so let's call it the same number. Last year, only 403. So the amount of active houses that are sale is up 64%. Now, that's quite a big jump. From last September to this September, we are up. And that's another reason, is that there is more inventory for sale. The interest rates have gone up. Therefore, the overall buyer activity has said, well, I got a lot more choice. But we only sold 288 homes because the interest rates went up so much that a lot of the buyers just went, time out, I'm going to sit on the fence because this is getting expensive and I'll wait a little bit, see how these interest rates are going to be. So we need to talk about that later on as well. Now let's look at the amount of inventory on the market. 2.3 months of inventory on the market. Last month that was 1.7. Last year that was 0.9. So that's what happens when you have low sales and you have high amounts of houses for sale. You get more inventory, and that's changed over the last 3 months. That's done this. So it's kind of, I mean, it's still 2.3 months. It's still not a lot of inventory, and it's still a strong seller's market. But when you look at the trend that's actually coming along, that's when you can see that we're starting to get towards like the number 5, which is the magic number of a balanced market. So no favor to the buyer, no favor to the sellers. Right now, still a pretty strong seller's market at 2.3 months. It's just, you look at last year at 0.9 and go, well, yeah, that explains everything. Now let's look at sales to new listings ratio. That was 69%. So We sold 288, but we only listed 419. So then when you look at the sales to new listing ratio at 69%, last year that was 97%. So you can see that all the factors are changing. The one factor that's not really changing is price, because the market is now expecting us to list a lot closer to asking. So we're not seeing that many houses that are going crazy over asking price. You know, we've certainly seen some really nice houses. In particular, we'll talk about Fall River. You know, there was one there that was listed at $1.7 million and sold for just under that. I looked at the house and was like, wow, this is really expensive price. But when you look at that sale to list price, it's pretty close. So a lot of the buyers, and there was only really one buyer that went in there quick, went in hard and got it. No multiple offers on that house. That's really what you can see is starting to show up in that Halifax market. Now let's get into some specific markets, because this is where things get a little bit interesting. So we've always had like a top 3 markets of being Sackville, Bedford, and then either East Hants or Upper Tantallon, Timberley, St. Margaret's Bay area. So when we look at this, Sackville, it's back at number 1 again. 28 homes sold, average price point there, $406,000. 0.1% sale to list, so pretty much asking price, and 0.9 months of inventory. Not a lot of homes for sale there, still only 24 homes for sale, so like it's still a tight market. Then we look at number 2 is Timberley Prospect, St. Margaret's Bay, 25 homes sold there. 26 days on market, $526,000 average price, and basically 0.3% just under asking price there. So like it's basically the same. And then 3.9 months. So there are 98 homes in that area for sale right now. So they're at 4 months of inventory. So you can see things are starting to tighten up there. Number 3, first time ever showing itself into the top 3 is Woodlawn Portland Estates, Nantucket area. 22 homes sold there, 23 days on market, $412,000 average price point. That's probably why it's actually showing itself to come into that area, because we're finding a lot more buyers are in that kind of 400 to 500 range, as opposed to, you know, you look at some of the other markets that we'll talk about, they're obviously a lot more than that. 1.1 months of inventory. Now here's the interesting thing. Fall River and Bedford were tied for 4th place with 20 home sales each. That's a lot of home sales for Fall River. Like in this month, September, we don't tend to do that many home sales in Fall River. So it's interesting that we tied with Bedford for 4th. So let's look at Bedford. Average price point there, $721,000. 30 days on market, nearly a month to sell your house there. And then 20 homes sold, 50 homes active, 2.5 months of inventory. Look at Fall River. Average price point there, $673,000. Like I said, there was about 3 over $1 million places that actually sold in the month. 21 days on market, 20 homes sold, 40 homes active. That gives us 2 months of inventory. So what does this mean for buyers? It means you're going to be in a lot better position than you probably thought you were going to be, say, at the start of this year. So yes, interest rates have gone up, but you're not having to go that much over asking price to get your house. So when you're not paying that much more than asking price, basically at asking price, all of a sudden that house that you were shopping for $400,000 now is $400,000 instead of $550,000. So for buyers, I would strongly suggest you go back to your mortgage person, you look at the rates that are possible, and you strongly start shopping. I mean, there's 660 homes out there in the HRM right now available for you to go and look at, put an offer on, go unconditional, and move in before Christmas. Better than paying rent. What does it mean for sellers? Well, you've got to be accurate. Like it's now showing that unfortunately we are going to see those days on market creep out a little bit longer. On average, 25 days. If you're in Bedford, it's basically a month that you could be waiting to get your offer actually accepted on the property. And, you know, it's time to start tempering that realization that, you know, maybe we're not going to get over asking prices. So if you can kind of price appropriate to the market that we're in right now today, September, let's not price it as if we were in March when we were still seeing a lot of over asking price houses. You've got to be more accurate, you've got to have a strong marketing campaign, and you've got to make sure that when you get the first offer coming in, look very strongly at it. Like, don't be that kind of seller that's like, well, I think my house is worth more than I listed for. that's going to make things really difficult on you, your agent, the buyers, and the buyer's agent as well. So really strongly make sure that you're getting the right price from day one. Do some good marketing, you know, hopefully in the first 2-3 weeks. That's when you've really got to take advantage of what's going on. So that's what it means for the sellers, that's what it means for the buyers, and basically we are in a very different market in September compared to how we were in April. So if you've got any questions, reach out to us, let us know how we can help, and we would love to have the conversation, and let's start looking for houses to buy, and let's start marketing and selling the properties correctly.